Whole life insurance, the financial trap that is disguised as security. That friend trying to sell you whole life insurance is not your friend. In fact, they are motivated by pure greed. What they are trying to do is get that commission. Because what they fail to mention is that whole life insurance agents get 50 to 90% of your first year premiums as commission. But the reality is, whole life insurance is probably one of the worst financial products that you can ever get.
That's a big statement. Hey guys, welcome back to the channel. Robert here. This is going to be a controversial one. I can already hear the typing of all of you that are going to make baseless accusations. Go ahead and bring them and I'll deal with them when you send them. Aman is right. He's right again. And a lot of you fall for this scheme because you see it as a way for you to build wealth aside from purchasing a home. And that's the area that I'm going to speak on. And so as we go through this video and listen to his points, the very first point that you cannot overlook is the incentive, the commission, and the amount of money that's front loaded with these types of policies. And you can't ignore that. A lot of the people that are buying these types of policies, the financial IQ is not very high at this point. And that's no shade. We're in America. A lot of us have not been taught the proper financial education, including myself. I had to learn these things over time. And so things such as whole life insurance, they sound appealing with some of the sales tactics because the people that sell these products are great salesmen. I could think of 6 right now. Love those folks. They're great people, but I don't agree with the product. And so the purpose of the video today is to give you a contrast on what I think you should be doing, especially in the demographic that's targeted, or the person that reached out and asked me about it. Younger, you're trying to leverage good credit score and a good job, good income, and trying to build wealth. I would say you want to get on the property ladder before you do something like this. But I don't want to say it because I'm a lender and that's what I do. Okay. So I'm going to curate those folks that aren't just talking, but have done what they're stating that they've done. In this case, Aman and his family, they most definitely have, and his information will be linked below. That way you can follow them and learn from them because their channel is based on investing in things of that nature. Let's continue.
Let's start with how whole life insurance really works. You see, whole life insurance is pitched as the perfect hybrid, part life insurance, part investment. You pay a big premium every month. Part of it goes towards your death benefit, and part of it builds up as a cash value that you can supposedly use in the future. Now that sounds amazing, right? But here's the catch. When you die, your family gets the death benefit, but not the cash value. You see, the cash value disappears back into the insurance company. Meanwhile, your premiums are sky high on a whole life insurance. And I'll give you an example of what I mean by comparing it to term life insurance. You see, a $1 million term policy for a healthy 30-year-old is around $680 a year. Now compare a whole life insurance for the same amount for the same healthy 30-year-old. That is going to cost $8,000 to $10,000 a year. So when you're comparing term life for $680 or whole life $8,000 to $10,000 a year, the premiums are outrageously expensive, but somehow whole life insurance is sold.
He states it and explains it beautifully. And so here's what I would say and what I said to the person that reached out to me. First and foremost, I'm going to take a page from Dave Ramsey. Do you have an emergency fund? Do you have income set aside for when life happens to deal with life, the ebbs and flows of life? 6 months being minimum. We have to start there. It's not sexy, but I think that's the first place to start. So you can only get there by having a budget and knowing your numbers. What we believe here on the channel is living at minimum at your means. But if you want to get ahead, you got to live beneath. Nobody's telling you that, but that's the truth. If you have not come from a lot of money that was handed down to you, you're trying to get there. You might be the first one in your family. I digress. So once you establish the budget, you get that first $1,000 and then 6 months minimum of your living expenses. Now we're cooking with hot grease. If you don't have a family, then you might be able to push this off a little bit. But if you have folks depending on you, term life insurance. Again, here's the principle. Somewhere, and I believe in the 2010s, when everything has been appified, i.e. investing, and made very simple, Acorn, Robinhood, some of these platforms, everything has been commoditized or commoditized, whichever the proper term is. And so the conditioning has been, it's an investment. If you really look at it, it's to condition your mind that you never own anything. So if you don't have anyone depending on you, you could wait a little later, but if you have a family, term insurance is to insure you in the event that your income is lost. And the insurance people will let you know there's a formula and they can figure that out. And the goal is to get it sooner rather than later. Same thing with a property or home. You want to get it sooner rather than later, and you don't want to get more than you need. The goal is for the insurance, if my income is lost, my spouse could cover my kids and have some time to get back on her feet. It's not forever money. But in his example, you have a healthy 30-year-old, let's call it $700 a year, opposed to $8,000 to $10,000. And it sounds good to you because, again, we've been trained to consume. We've been trained to chase a carrot that, oh, I'm investing and I'm doing these things. No, you're not. What you're doing is you're making the sales agent rich. I won't even say wealthy, because a lot of these folks like to get online and make you feel like you're less than because they traveling and they wearing certain things. And we went through that with the pandemic. It's a part of the marketing game, right? But the reason you come to these channels is so that we can raise the acumen, the IQ, so you can start seeing certain things and then focus on your specific situation, because that's what matters. So you get the insurance to cover you for the time that your children are coming up, and God forbid something happens, it could maybe pay off the mortgage or help the spouse take care of the kids for a period of time for them to re-educate or what have you. It's not forever. We got to get out of that mindset as well. Okay. And so when you do that, you can then take that difference of the monies that you're giving to the salesperson. Okay. Well, Robert, you sell too. I do. And I didn't say there was anything wrong with making money. You didn't hear me say that at all. So focus and hear what I'm saying. It's up to the buyer to beware. All right. That's why you didn't hear me mention any companies. Because again, I know great salesmen that sell this product. I'm not going to bash them, because at the end of the day, you have to sign on the bottom line. I'm just trying to help you understand it's probably in this person or in this profile's best interest to get on the property ladder, because say over 30 years, this so-called investment in whole life, where they're selling you certain things that you want to happen, you'll have that house paid off if you don't trade it up. And you still have to deal with taxes and insurance, no doubt, but you'll have something along with having invested in a Roth IRA or the stock market, however you want to do it, in equities or in other investments, maybe a business or something of that nature. And you haven't given all that money front loaded up front to the salesperson, because you got to understand that, because that's what it is. Let's move forward.
When people question the difference between term and whole life, one of the things that they talk about is, why is it so expensive when you're comparing the two? An insurance salesman will often say, well, whole life insurance is also an investment. They'll say it builds a cash value over time, like a savings account that also protects your family. They will say it's the best way to leave wealth to your family. You see, this is the emotional hook. They show you how your heirs get a big death benefit. But here's the catch. if you die with cash value in the policy, the insurance company often keeps it and just pays your beneficiaries the death benefit. Yes, you heard me right. The insurance company keeps the cash value that you built. The next trick that agents will use is they will say, the rich use it and so should you. You see, this is one of the biggest marketing tricks. You will hear wealthy families and corporations use whole life insurance policies. But what the insurance agent doesn't tell you is that those people have already maxed out tax advantage retirement accounts, real estate, index funds, and so many other investments way before they ever touch whole life insurance. Whole life insurance is like the last place that they would put their money. It's not where wealthy people are starting. They're not starting their investments with whole life insurance. They're ending their investments with whole life insurance as a tiny piece of a huge portfolio. And one of the last big tactics they would use is they will say you can borrow against your policy and be your own bank.
So yeah, man, excellent job again. And as I said, he's speaking the truth. And so just to be balanced, let's reiterate again, the purpose of this video is whole life insurance is a scam. I think it is, especially the way it's being presented. As he said, is it something that can and is used? Yes, but it's a very small percentage of wealthy people's portfolio, and it comes in an order of importance, or an order, if you will. And it's typically the last thing that's done when all other boxes have been checked. I had to think there for a second. So same thing happens in any sales environment in my industry when it comes to real estate, residential real estate, and or loans. You get the same emotional marketing strategies that are thrown out. On my side of the fence, marry the house, date the rate. You know, you can refinance later. Think that's kind of the same thing. Or FOMO, you better buy now because home prices are going up. You should not buy anything under duress or emotionally. You should have a reason why you're buying. Again, when we look at insurance, it's to cover my loved ones in the event that I lose my life or lose that income. Okay, because there's different types of insurance. And so because of the demographics that are targeted, that fall for these things, a lot of times they look like me or maybe look like you. Same folks that get targeted to go to college. They want first generation immigrants, people that don't have this understanding and think that, hey, this is a milestone that I have to achieve to make money, not understanding the cost associated with it. You see what I'm saying? And I didn't say not go to college. Hear what I'm saying and be honest with yourself. So when it comes to insurance, what's the purpose of the insurance? And what phase of my life am I in? And I shouldn't pay all this money up front when if I do that for 30, 40, 50 years, my family only gets the death benefit. In fact, if I borrow, I'm borrowing against the death benefit because the insurance company is taking all of your monies up front, the portion that they don't give to the sales agent. And guess what they're putting it in? They're putting it in the stock market, treasury, bonds, safe money that yields interest. That's how they're making money. That's why these insurance companies own a lot of real estate, because you're funding it. And so if you come from where I come from and you're the first generation and you're building wealth, after you get your budget, get your emergency funds, jump into that 401k at work, if up to the match, get into a Roth IRA, tap into some of these platforms where you can get low cost index and ETF funds. Check out Amon, because I'm not a financial advisor. Don't have a license for that. But check out their channel. They can walk you through other channels out here that talk about it. And you can use their channel as a litmus to see who it is you should be following and not some of these folks that are out here lying, because there's a lot of liars out here on the internet and they in your pockets. But once you have these things in place, it's of my opinion that you should get onto the property ladder sooner rather than later now. If you want to learn how to get on the property ladder and do so in the way and manner that I've outlined through this video, if I resonate with you, okay, if it's sizzling in your spirit and you want to have a conversation, the first 15 minutes is free. It's on me to see if we're a fit so that we can determine if we want to move forward to help you realize your residential. Heck, maybe you're a real investor and you want to learn how to capitalize on a lot of folks not being able to buy now. I might be a guy you want to talk to. My contact information is pinned to the top comment and or in the description below. So my time is up, but I thank you for yours. As I always say, guys, let's be good to one another. Let us let grace abound. And if you want to continue to learn how to get on the property ladder correctly, check out this video right here. Indeed, you guys be blessed.